essentially, let's just start with the Kering performance. So, I don't know how many of you know, but the financial reports for a lot of big conglomerates and companies come out every quarter. So the most recent financial reports that have been coming out are the Q3 reports across the board. And Kering, of course, released their Q3 report. And the financial performance is looking really, really terrible. Now, before I even continue, something that I want to mention is earlier when we were talking about Gucci and we would have conversations around, who is the person at Gucci and Sabato being there and, their financial performance before, it wasn't really a symptom of Sabato's clothing not selling. It was more a symptom of the fact that Alessandro Michele left and they hadn't really found a brand identity. But now we've had enough time where Sabato's clothing has hit the stores, it's been sold for a while, and they still have bad financial performance. So I'm still in two minds, whether that's to do with Sabato and it not selling, or still just in general, Gucci is struggling with finding a very strong customer base. Now, why is it important that I mention Gucci first? Gucci is the most important brand in the Kering stable. Gucci makes the most money, so it doesn't matter really how well all the other brands do. Gucci is so significant that if Gucci doesn't have a good year or a good quarter, it basically affects the whole financials of Kering anyway. So when you talk about Kering, the first brand to think about always is Gucci. So this is like a short version of their report. It's kind of like a really short press release, so you can kind of read through it. They talk about the revenue of the group, that they generated $12.8 billion, which is down 12% from Q3 last year, which is insane. They said in the third quarter, Gucci revenue amounted to 1.6 billion euros, which is down 26%, which is insane. Like, everything seemed to be down apart from, I think, Bottega. They said Yves Saint Laurent, the third quarter revenue was 670 million euros, down 13% from Q3 last year. Bottega Veneta, their revenue was 397 million euros, which is up 4% in Q3, which is obviously the only brand individually that's up. Something that was very interesting when I saw this report was their eyewear and accessories are doing really well. Really, really well. So all the other houses, the eyewear, the accessory stuff is doing well, which is obviously not surprising. We know that what sells from luxury brands, it's the perfumes, it's the eyewear, it's the belts, it's the cheaper accessories that are more accessible to more people. So that makes a lot of sense. And also products that don't require sizes. So things like perfume, it doesn't matter how tall or short you are, what your age is, everyone can wear perfume. Same thing with a bag. It doesn't matter how tall, how big, how small. It doesn't matter your body proportions. Everyone can wear the same bag because it's a bag. And so that's why there's kind of like a democratic vibe to those kind of products, even though the price is not democratic at all. There's nothing democratic about the pricing. So yeah, that's kind of the rundown on Kering. Of course, this is their official report that I wanted to look at because this is where all the really good figures are. So let me see can I zoom into this? Can I make it bigger so you guys can actually see it? Because it's a bit zoomed out. I don't like that. Okay, yeah, that's nice. So they're talking about the group revenue in the third quarter, like we said earlier, of 2024 was 3.8 billion euros, down 15% as reported, and down 16% on a comparable basis. They said the sales from the directly operated retail network were down 70%, once again adversely affected by lower store traffic. Now, the lower store traffic is a very important point to talk about because one of the big reasons why luxury fashion in general is having issues, I guess, even LVMH saw a few problems, is because Chinese consumers are spending less. Now, because of the political climate in China right now, a lot of Chinese consumers aren't going to Japan because, for those of you that don't know, the Japanese yen has been down for a while. So a lot of people from around the world, especially China, which is one of the main customer bases for luxury brands, they all go to Japan to take advantage of the exchange rate and get things for slightly cheaper, and also get things, tax-free and stuff like that. So when you have Chinese consumers no longer traveling and there being financial issues in China, which means people have less disposable income to go to Japan in the first place and buy things there, that's why they are seeing lower store traffic. So that's what they mean when they say there's lower store traffic, and it's led to a reduction in how much money, things are costing, essentially, because people aren't going to Japan as much. So that's like one of the big issues they're having. It's not just a Kering issue. LVMH saw a few of their figures down in Q3 for the exact same reason. So this is something that is an issue industry-wide. And I don't think it's going to be a long-term thing, because once things are looking back up, I think that, things are going to change completely. Boa says, at this point, wouldn't the prices in Japan have already adjusted? Not completely. Some prices have adjusted, but not all of them. Because even as recently as a few days ago, I had a few friends that went to Japan and had an absolute shopping spree. So I don't think all of them have been adjusted, but I think they're working on it slowly. Now you're making me regret not going with him last time. That's funny. But anyway, continuing what they're talking about, you can see the Q3 figures here. Now, as you can see from the numbers, this is exactly why I always say that when you talk about Kering, Gucci is the first point of call. Look at how significantly bigger Gucci is than Yves Saint Laurent or Bottega or all the other houses all combined, or Kering and eyewear and corporate all combined. Look at how massive Gucci is compared to the rest. So that's why I've said it before, I'll say it again. If Gucci has a bad quarter or Gucci has a bad year, Kering has a bad year. And I think in a lot of ways, this is why they invest so much in Bottega, because Bottega is on the uptick and it has been for a long time. And Kering is starting to realize that they can't rely solely on one brand. They need to build the other brands to as big of a level. And Bottega Veneta is probably the only brand in their stable that really has that potential to really 5, 10, 15, 20 years reach the big stage and reach the level of a Gucci financially. So I feel like more investment is going to go into Bottega, and I think it's something they are definitely thinking about. You can see all the losses there. Last year in Q3, Gucci made 2.2 billion euros. And this quarter, they've made 1.6 billion euros. Now, obviously, when you see 26%, it's hard for you to put those numbers into your mind, but that is a massive difference. That is a huge difference. That is enormous. That is so big. That is so big. Almost 600 million less. That is absolutely insane. That is just so insane. That's so insane. So that's why, of course, everyone is saying that Kering is in financial trouble. And it's weird when we talk in these terms, because Kering is a multi-billion euro company. They're not in trouble per se. It's just bad in the short term because shareholders, they get really panicky. People start selling shares. There's less trust in the company, and then it kind of affects a lot of other things. But in the long term, this isn't really a sign that, oh my God, Kering is in so much trouble. I think this would have to happen 5 or 6 quarters in a row. Then we would be able to say, okay, this is actually like a really big issue that we need to look at. Bottega, obviously, we can see it was 381 million euros last year in Q3. This year in Q3, they've made 397 million euros. It's good to see how much the eyewear and corporate is going up too. I wonder what is in corporate. I'm sure it'll be in this report. If that means like the hospitality, and a lot of conglomerates are investing a lot in hospitality and stuff like that. That should be interesting. But they made 333 million euros last year, and now it's up to 440. So that is essentially the rundown on which brands are doing well financially, which brands aren't doing so well. And now we can look further into the report and see some more of the figures. Holly says, people are not happy with Sabato. These numbers don't lie. I mean, it's true. It's definitely true, because before, when we had these talks about the Kering financial reports, we didn't really have anything to go on because Sabato's stuff hadn't really hit stores and had enough time to sell for us to see the sell-through rates and see what that means for Gucci as a brand. But now we have these figures. Rachel says, YSL feels larger in my mind. I know, because I remember one time I made a video talking about Kering is struggling because Gucci is struggling. And someone was arguing with me on TikTok about the fact that Bottega and Yves Saint Laurent are just as big as Gucci. And I was like, it really shows that people don't read the financial reports at all. Like, Gucci is so much bigger than Yves Saint Laurent. Like, Gucci is twice as big as Yves Saint Laurent by the financial reports. And if what's going by, and this is in a bad year, in a good year when they're making 2.2 billion, it's more than 3 times the size of Yves Saint Laurent, which is crazy, the difference. A corporate lady still shopping at Dior, snooze. How do you think they can fix Gucci/Kering though, or do they just try to ride out the storm? So to me, I just don't understand Gucci right now. And that's not really a knock on Sabato. To be very honest, I like Sabato's clothing at Gucci. I think it's cool. I think sometimes a lot of the stuff is derivative of other brands when they're doing ballerina horse bits because it's a trend and everyone is doing the ballerina Miu Miu and Alaya and Chanel and all that sort of stuff. And it just seems like they're just trying to copy trends. The problem with Gucci, even though I like it, it just has no identity. It seems like they are doing the whole minimal thing because they started that when quiet luxury was a trend. So they're kind of copying the Phoebe Philos of the world, the Hermès, the Row. They're looking at the success of that brand and they think that they can advance the success of Kering and advance the success of Gucci financially by copying that. So it feels like Gucci is all over the place. It doesn't have an identity. And I just don't understand why you would buy Gucci. And I think that is the biggest issue. Think about the kind of customer that buys Gucci. You would only buy Gucci if it's really Gucci you want. But if you're going for high quality, minimal style clothing, there are too many options. Just too many options. I can buy that at Phoebe Philo's brand. If I'm a woman, I can buy that at Le Mer. If I'm a man, I can go to Zegna and get that kind of vibe. I can go to Jill Sander. It's too many options in that segment. And I think with Alessandro Michele, one of the reasons why it was so successful, whether you like Alessandro Michele's aesthetic or not, it had a very distinctive aesthetic and it kind of separated itself from the pack. You go to Gucci because you like Alessandro Michele's aesthetic. Now, you don't go to Gucci because you like Sabato's aesthetic, because Sabato's aesthetic is a lot of other people's aesthetic, if that makes sense. So that's not the reason you go to Gucci. So it confuses me. From a product standpoint, it just really, really confuses me. I don't understand whether they think about that or whether they consider that, but it's confusing to me. To me, it doesn't really make sense. Like, I don't know what customer base they are going for. It doesn't make a lot of sense to me. So I think if Gucci had a more distinctive aesthetic and if Gucci had a more distinctive style, I think it would be a lot better, to be honest. But until they figure that out, I don't see anything improving, because once again, it's too many people in that customer base and that clothing segment of minimal, high quality clothing, too many people there. To say that Bottega Veneta is as big as Gucci is insane. Yeah, I think it comes down to people are going off what they're seeing on social media. They're seeing a lot of influencers wearing Bottega and talking about Bottega. I mean, geez, I've made a few Bottega videos and TikToks recently. So it's recency bias, I think, which is why people might think that Bottega is bigger than Gucci, which obviously isn't rooted in any sort of factual reality in any way, to be honest. But let's see what they say about every brand and why they are saying the sales are different. So they said, sales from the directly operated retail network were down 25% on a comparable basis, the house being particularly impacted by market conditions, especially in Asia Pacific. The overhaul of Gucci's leather goods category, with the introduction of a host of new products late in the quarter, is well underway. Wholesale revenue was down 38% on a comparable basis, reflecting Gucci's strategic streamlining of this distribution channel along with difficult market conditions. That's convenient for them to say that one of the reasons is that they want to streamline their distribution channel strategically. Now, that is something that happens. Brands do that all the time. Even recently, I know this because, of course, I do work behind the scenes. Over the past few years, Rick Owens has reduced how many stockists that they work with because they felt like their clothing was starting to get too accessible. So they started removing their clothing from specific stores and they were being more strategic. So this happens. However, you're only in a position to do stuff like that when you actually have good financial performance. Gucci is in no position to be strategically removing and streamlining their distribution channels, which led to revenue being down 38%. Do you know, as big as a brand that Gucci is, do you know how massive 38% is? There is no way that was all strategic. I do not buy that for 1 second. There's no way your revenue, a brand that is already struggling financially and seeing their revenues go down every quarter, there is absolutely no way that you strategically had your wholesale revenue go down by 38% on a comparable basis because you're streamlining your distribution channels. Sounds good, but I don't believe it. 1 second. Let's see what they say about Yves Saint Laurent. Sales from the directly operated retail network were down 12% on a comparable basis. Yves Saint Laurent's fashion shows continue to garner universal acclaim, and the house is further enriching its leather goods lines with numerous product launches planned between now and the end of the year. Wholesale revenue fell 20% on a comparable basis. This is true, though. I don't see, Yves Saint Laurent badge performance lasting too long because I think that their last runway show was really successful, and I think it's starting to. There's a buzz around Yves Saint Laurent. There has been one recently. I think it's going to come back with that one. So I don't think there are as many issues with Yves Saint Laurent or any of their other brands, to be honest, versus Gucci, to be honest. Sabato at Gucci will never work. Damn. And I actually really like Sabato's clothing, but like I said earlier, it's just, who is the customer? You're not going to, designing clothing that looks like that, you're not going to collect all the minimal customers from The Row and Prada and Dior Sander and La Mer and Xenia. It's just not going to happen. So for me, it's just who is the customer. But if I'm judging Sabato's clothing as a standalone thing, I actually really do enjoy his collections. I really do. Also, remember, if something is selling well, you don't need PR. So often the things we see in PR aren't actually the most successful. This is also true. That's true. They are cleverly navigating the point that some retailers are declining to stock entire collections or as much as they previously would. But there's a lot to be said with the retailers currently. Yeah, that's also another thing, because if a lot of stores were stocking the Alessandro Michele stuff because obviously it's very distinctive, the Sabato stuff, I can't see how people would want to stock that as much because, once again, it's not distinctive enough. It doesn't have enough identity to separate itself from the pack, unfortunately. It's just, that's the issue to me. That's the big issue with Gucci. Anyway, let's continue. Let's see. Bottega, which obviously has been going from strength to strength. Shout out to Matteo Blasi, who's doing an amazing job there. Let's see what they say about going up 4% in Q3. Revenue growth in the house's directly operated retail network was particularly solid, up 9% on a comparable basis, driven by double-digit growth in North America and Western Europe. The house's performance continues to be buoyed by the outstanding success of its leather goods range. Its most recent fashion show once again attracted extensive praise. Wholesale revenue was down 10% on a comparable basis. So yeah, obviously their leather goods, insane. They've been selling like hotcakes. That doesn't surprise me at all. And And then they're saying there's double-digit growth in North America and Western Europe, which is huge. But I guess the main reason why the brand is only up 4% this quarter, even though there was double-digit growth, which is insane in North America and Western Europe, is once again, numbers-wise, Asia is still the most important market. So for that number to be a lot higher than 4%, they would have also needed to see decent growth and even like double-digit growth in Asia, which is why overall it's up 4%, even though in specific markets like Europe and North America, you know, the US, Canada, it's up double digits. This YouTube channel runs on your support. If you want to support the channel, you can subscribe to my Patreon. You'll gain access to exclusive content that includes everything from my Patreon podcast, where I give a behind-the-scenes insight into the fashion industry, as well as a fashion book club, where I review my favorite fashion books. You can also check out my fashion ebook, which highlights the best fashion journalists to follow, definitions of common fashion terminology, and how to determine what a good source of fashion information is. The links to everything are in the description below.